Let's get it. What up, everybody? So welcome to the watches of September 22nd, but it's also a whole lot of value I want to talk about from last week as well, as last week was FOMC. Anybody who was here before the recording knows we just had some bloopers getting into this, but we active. Let's get right. So first and foremost, this is coming off of FOMC week. So that's not going to be our last FOMC week. There's going to be a whole lot more where that came from. So it's important to know how to trade a week like this, a week with intense volatility, just a week with no real direction. I think a lot of people were really speculative on where the market could go. I saw a lot of different predictions out there. People saying we're gonna rally crazy. Some people saying we're gonna tank. And it's just like, yo, the market was definitely at an in-between point and it could have gone either way. So something I was trying to tell the community heading into FOMC was, yo, it could go, I don't think they're gonna go anywhere on FOMC day because everybody's watching it. So the first thing I want to pull out from last week is, I'm not saying we never make a move when everybody's watching, but you shouldn't be surprised when we do not make a move while everybody's watching. Instead, because the whole world was looking at this FOMC as, like, even statistically, it was the most highly anticipated FOMC meeting because of the rate cut potential. Like, was Jerome Powell going to do 25 basis points or 50 basis points? Everybody knew he was cutting. We actually talked about that last week. I showed y'all the official tool, this tool right here. I showed you guys this where you can see the the projections, or the the predictions on what the Fed is about to do. It's an official tool. It's not just some random stuff. And so, that's kind of where everybody knew we were going to cut. It's just how much. So now the Fed cuts 50, and it's like, whoa, because a lot of people thought the Fed was going to cut 25. So the cut 50 is signals to investors like, yo, is something wrong? Like, yo, are we about to go into recession? You understand? So that's where that come from. Now, all right, so boom, they throw out this crazy candle right here. They throw out this crazy candle. I can actually probably show you this candle better on the 1 minute. You get, I can show this candle better on the 1 minute. You can see this is the 2 o'clock candle. This is the interest rate candle. So the price went up. So first lesson, and if everybody's looking at it, be careful. Might go sideways, might be choppy. Second lesson, on FOMC, I told you guys, said it in the chat before FOMC even started. I said the first move is usually a fake out, meaning the first candle, like this 2 o'clock candle, if it pushes to the upside heavy, don't be surprised to see reversals. Usually it does a flash to the, if it flashes to one side. You see this long wick at the bottom, it's going to flash to one side before rallying to the other side. That's typical, but ultimately whichever side it truly expands to is usually a fake out. So that's something else you could look for on FOMC days. So you see that transpired on this past Wednesday. And then what happened after that? Sideways, killing people, man. Bears got happy here. First of all, on the original candle, bulls got happy, then bears got happy, then bulls got happy, then bears got happy, then like back and forth. Nobody's winning. I always say no one wins when the family feuds. And so that's kind of what was transpiring here on the NASDAQ until it actually moves. So another thing to take away, third takeaway from FOMC type days is that don't trade. I didn't take not one trade in here, by the way, not one trade in here, because one, I'm never going to trade the news candle itself. That's crazy, and that's like dumb. I'm gonna be real, like that's just dumb to do. You never trade this candle. And then the candles that come after that usually are exactly what you see here. It has no real direction. It's chopping because they're waiting to see what Jerome Powell is going to say. At least that's what they sell it as. Y'all know that this is all predetermined, but this is like manual intervention. This is when they can just kind of mess with people's contracts and collect liquidity on both sides. And that's what they're doing in that time period. And so they holding price in a tight range and just collecting money on both sides. That's what's going on. And so your third lesson is don't trade really until around 3 o'clock ish, minimum, like super minimum, if you're gonna even trade. The true best advice and the most responsible advice I should really give, this is not financial advice, I guess the most responsible recommendation I could give y'all is to really not trade FOMC. You feel me? Like, you really shouldn't even trade FOMC. You should just look to trade the next day. But if you are going to trade it, I definitely don't recommend trading anything until around that 3 o'clock area. And then now, if you see what happens, you'll look, this is the 255 candle, 256, 257, 258. Whoa, all of a sudden, right? Okay, 258, that's a little decent candle, but we still in the range, a little choppy and everything. But then you see 259, 3 o'clock, 301. Oh yeah, all of a sudden they went somewhere, right? they went somewhere. Why? Because that's usually the time when you can start looking for trades around that 3 o'clock area into market closure at 4. So that's the first thing that we could talk about. I mean, those are 3 lessons you could take from FOMC. And so now let's kind of dive a little bit deeper into technicals now, past FOMC itself. What I would want you to notice is that on this initial push up, if you were to look at this entire range, so you see this range, I'm on a 1 minute time frame. I don't want to go to a different time frame for now, but you could clearly see that the highest point that we had in this overall price range was indeed right here. See, this right here was the highest point that price went to in this whole overall price range. So that high was put into the market on Tuesday. Remember, FOMC is Wednesday. This high was put into the market on Tuesday. So I'm gonna go ahead and mark that off, and I'm gonna draw a horizontal line on it so we can know that this was the previous highs. And then what happened on the FOMC candle, the original candle that when the news came out, they flashed up, ran those highs, and then we came back hard into the range. So you got 2 things working for you that tells you that we're probably going to end up making a move to the downside. One is the fact that we tried to leave the range. It's like playing the extreme of the range. We tried to leave the range and we failed to leave the range, right? If it really wanted to go super bullish, it would have had continuation. You would have seen fair value gaps being made above, and we would have pushed higher. So when we fail to leave that range and we come back in like that, then now you have to think to yourself, who has been extremely protected in this market, right? Like whose stop losses have never been breached? So if I were to go to the 5, for example, you'll see what I mean. So this was the high of the range, this the low of the range, the high of the range, the low of the range. So on FOMC, what did they do so far? So far, they ran the high of the range. I mean, all the people that were short the market and had stop losses up here, all those stop losses got destroyed. They got taken out, obliterated. They up out of there. Copy. We handle all the breakout traders, because let me show you how it worked. When price broke quote unquote resistance, breakout traders went long. When price came back to the range, what happened to those breakout traders? They got stopped out, no? Okay, cool, just checking. And then what about the people who've been short the market? Whoever shorted right here, they're still protected. They never got stopped out. They stop losses is all above here. There's an entire pool of buy side liquidity that exists right here. So this FOMC candle came and it took out all those stop losses. They're protected. But what about people on the downside though? Oh my gosh, they never got taken out. Masterclass people, we actually talked about this concept as well regarding objectives. I gave the masterclass people a little tip about objectives and everything. So without even like getting into that, y'all could, hopefully you guys see what I'm getting at when you look at these lows and how these lows are positioned. That's what we talked about yesterday a little bit, if you remember that tip. If not, it's okay. The recording is coming tonight or tomorrow. So either way, there's a high chance based on what we talked about up here, as well as these people are still protected, and the formation of these lows also could tell you that we about to make a move to kill these stop losses. It don't have to accelerate to the downside, but to at least target those lows becomes a lot more probable. So now, remember, those lows exist at the yellow line. Let's look what happens. Price starts teasing, like, oh my gosh, this is not a good sign, because if price was gonna go lower, I promise you, this fair value gap would have sent us lower. So when price comes above at this point, you already know price is making a deeper retracement. Like, we're gonna have a deep retracement at this point. Notice I didn't say reversal. The reason I don't say reversal is because if it was a reversal, that means I expect us to make new highs in the market. I don't expect us to make new highs in the market because our downside objective was not met yet, right? We didn't actually run out these stop losses. So that means all the bears in the building are still partying right now. The bears are still rich. I don't like that. We got to tag the bears out. We already handled the bulls. The bulls is up out of there. Now let's handle the bears. So let's get it. So boom. The market trades up at this point, makes a move higher. This move right here is a trap. My mentees know about this trap, and mentees, if I draw the visual, this is the visual that we went over in class, like this exact visual right here, if y'all get what I'm getting at. So you shouldn't even believe in this downside move at this point. Y'all should have, like, we're not even literally believing in that downside move. because of that. Mentees, I hope y'all picking up what I'm putting down. Now, boom. So all of a sudden, you know, PD arrays that exist in a premium or on the high side of this price leg. So if you look at the 5 minute, for example, we got a 5 minute bearish fair value gap here. In other words, a SIBI. You know, price rejects this SIBI. But Rel, what you mean? Like, I seen a wick come above it. I know I got some new people in the building, but like for fair value gaps, as long as bodies are holding the area, that's what we looking for. You can see where the bodies are sitting right there, holding this area down. So as long as the bodies is holding this area, we good. And we love the fact that they, you know, generally stayed around the 50% and lower. That's an even better sign for us. And so, you know, as price starts to make its way to the downside here. So when you're looking for like entries for downside, because once again, we did not expect a reversal. Like, let me back up and remind you that we did not expect a actual reversal because we never actually met our sell side objective yet. Therefore, you can anticipate price coming to a premium to come back to the downside and actually meet the objective of running out this liquidity down here. Okay, so now that's why you're expecting this to get shorted. And there's also like another reason, but I already talked to my mentees about that, and it is a mentorship topic, but I'm reminding mentees just from a higher time frame perspective, you know, just if you're just looking at these highs, y'all should already know why we were anticipating a return to yellow. Just you know what I'm saying, mentees? I'm trying to talk to everybody. I got my mentees in here. I got free people in here. I got people that just met me today in here. You feel me? So like, I'm trying to talk to everybody at the same time. I'm not trying to talk in code, but I got to talk to everybody at the same time. So anyways, now for everybody, you know, this, if we're bullish, we would hold the upper half of this fair value gap. So when you notice this happen, let me show you something. And this is when it comes to like learning expectations on fair value gaps, right? In this scenario, we looking for the upper half to hold of this fair value gap. So if we're gonna be bullish, this should make a higher high in the market. Okay, this is a good sign. So you're like, yo, maybe I'm wrong. Maybe we're not actually gonna drop off. Maybe we're actually gonna, you know, I could be wrong. We could all be wrong. So it's like, yo, maybe we're gonna make a run for the yellow line. Cool. But when you notice that price puts in a failure swing, what is a failure swing? A failure swing means that after we retraced, we failed to make a new high. Notice that this high that I just put a circle on is lower than the highs to the left right there. So on this down move, we tapped into a fair value gap. It gave us a nice little bounce, but it was a failure swing. We did not make a new high in the market. That's a bearish sign. That doesn't mean we're bearish. That's a bearish sign. Like, that's something you should say, all right, hold on, let me take a step back, because maybe we about to come down right now. Like, there's definitely potential we could come down right now. So when you see that happen, you know, fair swing, boom, we drop off a little bit, and then there's a chance this fair value could be used again. Do you expect it to be used again? No. I don't know. I don't. I'm gonna tell you why I don't. For all the reasons I already told you. I already told you what the higher time frame is telling us is where it's going. So like, for me, when I see this failure swing, I don't even think that we're gonna, you know, bounce here a second time. And then, like, no, why would I expect that if I already got direction from the higher time frame? And so this is the big mistake that people make as they trade. They say, man, like, I was looking at the 1 minute time frame, and like, you know, it was looking bullish. It's like, you need to zoom out, scan time frames to understand what the overall picture is. Like, what is truly going on? Because the 1 minute could be bullish for a bearish move. Don't that go over your mata? It could be bullish for a bearish move, because right now it's technically bullish here. You know, we made a high, higher low, higher high. It looks good, but it's really setting you up for a bearish move. So how do you know that it's a setup for a bearish move? That's where you go to the higher time frame and you do that analysis. So I already broke down for y'all. You know, we talked about coming over these highs, and we talked about leaving these lows open and stuff like that. So at that point, all these 1 minute movements, you can see them as fake outs. And on top of that, y'all should know that price don't, like, if we were bullish, it wouldn't look like this. None of this would have happened if we were bullish. It would have been a nice little pivot for real. It's not going to like do this nonsense that it just did, drop off, chop again, go up, chop again. Like it's just highly unlikely that that's how the beginning of a reversal is about to start. That's how price move. when it's pretty much a fake direction. This is like this. You could tell the movement of this. Like this ain't it. You know what I mean? This ain't it. They trying to get you. So as we come back to this fair value gap, no, I don't have an expectation that it's gonna work again. You know, and then lo and behold, it doesn't. I mean, bodies are holding it so far, but we already have expectations. Yeah, okay, now it officially does not work. Plus, now I'm talking about mentees again for a second. Plus, mentees, y'all should know once we lost the upper half of that, it was over with. You already know where we're going. After off the rip, nothing else to talk about. Nothing else down here is even relevant for us at this point. You know where we're going. So at this point, you know, any rally that comes in the market, like this green candle, any rally like this, the top of this wick, you should be suspect on it. I'm not saying you have to hold your trade for that. You absolutely could, especially if you're sized correctly. There's nothing wrong with holding your trade for that, but I wouldn't go long here. You know, I definitely wouldn't go long here. People like every fluctuation, like, oh, I'm in buys, I'm in sells, I'm in buys. Y'all guessing, y'all gambling, and that's an unhealthy way to trade. You know what I mean? When you see a pop like this after we already know where price is going, this little retracement here is nothing to panic about. You know what I mean? And then next thing you know, lo and behold, price ends up making its way to the target. And this here is 3:48 p.m. at that point. So now, you know, target hit. At this point, it really could do anything because you can't get like overzealous. You can't get hyped too much for downside when we are truly trading in a range. Like let's zoom out and really realize, like, hold up, we trading in a crazy range right now. So for you to expect us to just tank, especially with what 12 minutes left in the market, think that ended at 348. Like why even expect all of that? It's I would get out my play. Once we ran those lows, I'll probably sell my position. You know, if I were you. So when you're in a range, you also have to take on a different trader profile. And one profile that I take on in ranges is I'll decrease size and I take conservative targets. And if I'm cool with leaving a runner, but I'm definitely taking high majority of my position off at the guaranteed targets. Like this yellow line was like a guaranteed target for me, but expecting us to run to these lows, and it's like I don't know about all of that right now based on how price is traded in here. And another thing that would keep me humble from expecting much more downside is this. Look at the nature of this drop. It's super staggered, like a really stubborn drop. How many times I gotta scream at y'all every week that is very suspect. That is not really what moves tend to look like. Moves don't usually look so stubborn. Like when the market want to go somewhere, it goes. You know what I mean? So for me to expect like some ridiculous downside after it started off like this, hey, I think it's safe to take the what we call low-hanging fruit objective, which is just the yellow line. So that's a great place to exit your trade. I mean, and then you'll see what happens after that. What do? We start chopping here. Now, what's something else we talked about? And who pays attention every week for real? Who pays attention every week? I hope y'all paid attention. We talked about running liquidity and consolidating after that. I don't even like when we consolidate prior to liquidity, but I'd rather this because then you could get a move like that, right? This is okay, but this is not okay. You don't want to see us meet the objective, then consolidate, because what typically happens after that is boop, big reversal. You know, you expect more that probably not gonna happen. You could consolidate prior to, you don't want to consolidate after. So that's another thing. And on top of that, it wasn't no fair value gaps anywhere near here, which shows you that we stubbornly moved to the target. So all these are signs that's telling you like, yo, if you're expecting a huge drop off, good luck to you. Can I get ones in the chat if you understand it, what I'm saying? Can I get ones in the chat if it's clicking for you, if I said something that is resonating? Guys gave a lot of tips based on just one small segment of price action. All I need is for one tip to stick, and then I'm like, okay, I did my job. You know what I'm saying? That'll make people money at some level. So repeat one more time, please. What I'm talking about a lot of stuff I said. I'm talking about everything I said, not like one specific sentence. I could repeat the very last thing I said though. And I appreciate everybody putting ones in the chat. Like that's dope. There's a whole lot of ones in there. I'm glad that it's sticking. So what I said, I'll repeat the last part, is that like after you meet an objective such as running the liquidity target, you don't want to see price consolidate after that. That's one thing that you don't like to see. Also, there's no fair value gaps heading into the area, which also shows you that we stubbornly moved there, which is probably a good sign to that. Oh, we're not about to aggressively move past it. We're just going to touch it and reverse. That's a sign that we may sweep. So if you're anticipating sweeps in the market, they usually come after staggered moves. It's okay if we consolidate prior to running liquidity. That's okay. I still don't like that, but it's definitely way better than running it and then consolidating. And yes, there will be times where it will do this on you. It'll still drop off. Yes, it's a probabilities game. So in trading, you have to make decisions. All right, I'm playing a game based on probabilities. And so as a trader, I have to realize what's the more likely scenario, and I have to base my strategy around that. Because if you're gonna base it on the minority, you're gonna lose a lot more times than you win. But everything I tell you is based on probabilities. I'm always telling you guys about the higher probability scenario. So yeah, when you see it look like this into a target, the higher probability scenario is you're about to witness a retracement or a reversal. Just putting you out on the probabilities. So that's that, and then shoot, literally, I just press play and just let it play out, real talk, because y'all just gonna see what end up happening. Like, it's literally just enough said scenario. I might just go to a different time frame and just say, bro, not like literally enough said, because this is what ended up happening, man. We got the heck up out of there. Man. And so this is what we look for, man. This is what we look for. We knew you couldn't get too hype about this downside based on everything we talked about. But could you target it? Yes, absolutely. You could target the yellow line, but to expect a lot more under that was just a little suspect. And then, that kind of takes us into, we tapped into a daily PD array over here, which, you'll see it's not on this chart. It's on my other NASDAQ chart, but I'll show y'all what I think about the upcoming week, of course, anyways. But we tap into a daily PD array there. And then what did I say in the chat? We're going to make a return into the lower half. Very specifically, we're going to return to the lower half of this fair value gap. Mentees, any mentees in here, remember the plan, because I don't want people to think we just be talking. Mentees, did we not say in class that night that what's very possible is that price could tap it? You see this tiny fair value gap. We said it's played out to Lady Cuz already know what I'm talking about. Price, the 4-hour bodies should hold this green area while the wick, literally the wick itself, should touch this. The wick will touch this tiny fair value gap, but the bodies will hold the green area. Like, yeah, Mentees confirmed it in the chat. That's literally the plan. So it's just funny, like, when I say this whole market, Spader said he heard but don't remember it, but Marcus remember, Katrina, Lady Cuz, like the Miss Teresa remember. Yeah, like, it's crazy. This market gets real predictable because that's exactly what happened. Like, bodies obviously held it. Bodies are actually above it, but the way that the wick tapped into this baby fair value gap, and that was the bottom of the day, after we literally was talking about that the previous night, like, that was fire. I'm like, bro, this market it gets very predictable, man. They'll be doing the same thing over and over and over. This was literally the bottom, but simultaneously we were correct about price coming to the lower half if we wanted to move higher. And and then we'll see what happens there. So that kind of takes me into like, I guess, like, this week. Let's get to this week now. That was my wrap up about last week. Let's talk about expectations for this week and all of that. So I'm actually get off this chart. I'm gonna go down here, and then we are about to get right. Okay, so as always, when we talking about the upcoming week, we got to talk about time. We talk about time and price. So time and price is not just AM, PM. Time and price is economic news. You got to know what's the best days to trade, not just the best times to trade. So I should say day and price. I should start a new slogan called a day and price. Now, Monday, PMI, all right, nothing too crazy, nothing to like be alarmed over. Tuesday, Fed speakers, consumer confidence, not really too excited about it. Wednesday, Wednesday looks trash. Thursday, GDP second revision is a decent one. I see they say Jerome Powell is going to give opening remarks at 9:20, but seeing that the Fed president John Williams speaks at 9:25 tells me it really just sounds like opening remarks. Like it's nothing to probably move the market. Like it looks like he's probably going to talk for literally 5 minutes. So I don't think Thursday's event with Jerome Powell is nothing to be alarmed over. Or like, yeah, to have no high expectations over. It look like Thursday is probably gonna be choppy, like based on the amount of Fed speakers talking. Like ultimately, I ain't gonna front. This week looks kind of trash. Like besides Friday, Friday is a big deal because PCE is a very big deal to the Fed. But heading into PCE is not looking too hot for me. The only thing that makes me feel like price has the potential of going somewhere is like I could show it better on the chart. I hope I remember to say that point, but I don't want to. I would have to show you on NASDAQ. Maybe verbally, I'll just say it. Verbally, it's because of, NASDAQ broke the range and it came back into the range. So it's like something should happen from there. Like to break the range, come back to it, and then chop again in the same spot is like I hope they don't do that. I would hope that after breaking the range and coming back to it, it's coming back to it to either bounce off of it and move back to the upside or completely just drop off right now. But either way, we're either going to move up or down instead of sideways. We don't want to see it move sideways for me. So, but we'll see. I talked about that when I get back to NASDAQ. So let's go to the dollar right quick, DXY. DXY is in consolidation. So we don't like when DXY is in consolidation because it typically keeps all of the markets in consolidation, as the dollar is such an important part of financial markets. So being that the dollar is consolidated right at our target, we targeted this yellow line, we hit it, and then we've been consolidated ever since. It's just like, here we are. If y'all remember, I wanted price to tap into this blue area, and then we were going to make a decision based on that. It never actually got to the blue area. It ended up rallying. We were correct about a rally, yes, but it didn't get to the target. So now price has just pretty much been in that same general spot though. We just chopping up right here. So until DXY like breaks this range either to the upside or downside, it's kind of hard to gauge it at that point. This is typically when you're supposed to sit cash, to be honest, because an objective was met. The yellow line, this sell side liquidity here that's an objective that we had to the downside. We've been sniping the heck out of this since up here. I don't know if y'all remember this many moons ago, back in June. We called the rejection right here to the tick, and then we call this rejection, we call this reject, like all these things called out beforehand, and then now we just at the bottom we got to the target, and we'll see what comes next. This is something else that we talked about, the 2-year, which is directly related to those interest rates. But the 2-year, this arrow, y'all know the rule. We never move arrows. We never touch our arrows on the chart. We don't move them. That's the rule. And I mean, it's playing out, but it's like super choppy, super stubborn. So it's like low key when I see like the 2-year, meaning the bond market and the dollar both kind of just consolidating, to me, it's just the overall market condition is not favorable. And I cannot wait until either of them pick a direction. Like the dollar got to break out, 2-year got to start moving again. Like, look, the 2-year was moving nicely in this time period, and then lately it's just been pretty trash. And same thing with the dollar. So until they really kind of get some direction, my expectations on the market are largely very low. I remember a few weeks ago I told you guys, like, I wouldn't be surprised to see the market hit a real stage of consolidation right now based on the inability to meet the buy side objective and the inability to meet the sell side objective on the higher time frames. So if you're not meeting the buy side nor a sell side objective, you're likely looking at a consolidation time period. And that's what's really been happening largely. If y'all kind of peek, we've really been just consolidating on the NASDAQ, for example. So, when you now look at other tickers like dollar related tickers, I wouldn't trade them like until the dollar really picks a direction. Everything we said would happen. We talked about price using this order block to come to these highs. It got to the highest body here. Cool, that's an objective. Objective was met, but the order block worked out. We talked about this last week. Price tapping into this 4-hour BIST to move higher, but I don't think it actually tapped into it. It just moved higher without it, which is okay. We're correct on the direction. I guess it ended up. It actually did tap into the 4-hour BIST. That's fire. Even better. Even better. So we wanted it to tap into this to run higher, and I guess it actually did. That's good. That's good. So we actually were good on euro. They were supposed to do, but you can see the movement is pretty trash, right? So it's like not anything I would like to trade. And I'm talking about forex people, obviously. We had this bullish OB here on British pound, but really the plan for last week was to use this 4-hour BISI. We talked about using the upper half of this specifically. We're always specific about our fair value. Yes, we wanted to use the upper half of this to run higher, and obviously it did that. So British pound delivered, but you can see that price is consolidating now, and you see the dollar is consolidating as well. So it's just low probability conditions to me. Everything in forex is looking the same. That's a dollar pair, and that's why I'm really just showing this to show you like we're correct directionally. We wanted price to use this weekly BISI. I'll show it to you. We wanted price to have bodies hold the upper half of the weekly BISI. That was the plan, to make a higher high. So far so good, but you can see that it's a very disgusting looking move. So just because you may have an idea of where price should go doesn't mean you need to participate. I want to make this very clear for y'all, like largely, especially when you learn certain concepts, and I really hope that y'all could join us in December for the next cohort, because that's where I really share literally everything. Because on these free classes, I share a lot with y'all. I think that's why people find a lot of value in it. But it's literally like 10% of what I know. It's like 10% of like what I would ever talk about in the mentorship. It's such a small amount. There's so much I don't say on these Zooms, y'all don't even understand. And so it's like when you guys really do learn all the concepts, if you ever pull up on the mentorship with us, then it's like you're gonna really feel like you largely always know where the market is going and even what it's gonna do to get there. But when you notice movements like this, those are the ones you don't trade. Like, just because I may feel like, yo, we're gonna come to these highs, doesn't mean I have to be a part of that move. Because if the movement is not favorable, if it's looking like this, I don't want to be a part of that. It's a headache. It's tough to deal with your risk management with it, because the retracements are so deep and unfavorable that's like, if you don't have the picture perfect entry, which is literally the bottom, everything after that is just like, it's tough. Because I noticed the daily chart, but the same thing applies to every time frame. It's like, picture you got in right here. This is a solid entry, but I won't even say right there. Let's just say you got in like, right here, something like that. I don't know. Yes, there's more upside and everything, but this big red retracement, it would just be annoying to hold. And so we like moves that look like this. You see these 3 green candles? We like trendy moves. This whole move is nice, but now it's getting choppy, it's getting stubborn. So just because you know where price is going doesn't mean you have to trade that. I don't even say things like, I used to say this stuff, I don't even say things no more like, oh man, price it went to my target though. Like, I don't really say stuff like that too much, because it's like, price really usually goes to my target. Like, it's very rare. It's definitely the high minority where I'm wrong about where price is gonna go. That's not really the issue. If I'm taking a losing trade, it's probably because I got caught up in chop. The target was correct, but it chopped until it got there. And so that's why I say you still have to end up making a decision on, yes, we know where price is going, but that doesn't mean you have to participate. So I'm going on a rant here for that, because I think a lot of everybody's losses is based on you guys trading moves that look like this. You know what I mean? Trying to like fight price action. If you feel like you fighting price action, that's the first fight you're gonna have to run away from. I'm gonna be real. You know what I'm saying? I never ran from a fight in my life. I'm lying. I definitely ran from a fight in middle school. I ain't gonna front. One time I ran from a fight in middle school. Yeah. But I don't tell that story too much. I definitely ran from a fight one time. But we don't run from fights in real life. But when it comes to this, the market and the market makers, y'all don't fight them. Don't fight them. They're gonna win the battle every time. So that's my real advice to y'all. Thank you, Lady Kel. She said, invest in yourselves. You'll be glad that you did an unmatched mentorship. I appreciate you. Real talk. And so yeah. So let's get it. Let's keep it going. USD CAD. Y'all see. Same vibe. I'm just showing you Forex to show you it's not favorable, but we're still watching this area overall. This weekly SIBI. We're still watching this area overall. To see if it could produce downside. We want to see bodies hold the lower half. So far, so good, but it's tough. This is a big decision area for us on USD CAD. Ms. Teresa said, yes, come and join us. This mentorship is worth it. Appreciate y'all. And it's only getting better. We still got a good amount of more classes to go. It's only getting better. So yeah, you know, like I said, Forex is all in the same position. So I personally would just stay away from Forex. There's nothing I'm saying, nothing is different than I've said on other weeks on Forex, because it hasn't gone anywhere in a couple weeks. So the past couple watch lists, the Forex analysis has largely been the same. We've been in the same spot. Now Bitcoin, same thing I've been saying on the other ones. As long as bodies are holding this weekly BISI, I can't be bearish on it. Am I suspect about upside though? Yes, I am very suspect about upside on crypto. I think just like the NASDAQ, there's a chance it could still move a little higher, but like a super breakout, I'm still suspect on that. I wouldn't be surprised to see crypto find its way to the downside. But until this PD array gets invalidated, the same PD array we've been talking about since March, and I'm not even exaggerating, we've been talking about this PD array since freaking March when it formed. This same PD array, as long as bodies are holding it, I cannot go bearish on Bitcoin. You feel me? So body's been holding this thing since freaking March, and so we gotta maintain that analysis. Under that, we'll talk. You know what I mean? We'll talk. For now, that's what it is. So that's crypto. We talk Forex. We talk, you know, bonds. We talk the dollar. Now let's move back to futures / NASDAQ. So let's get there. Let's get there. Those is all handled. Yeah, this looks noisy, right? Don't worry, it's gonna be clear on the 4-hour. I should have hit some of these things for real, so it doesn't look so noisy. Okay, hold on. Let me make this better. Let's go here because I don't need this chart. All right, so on the weekly here, on the I was like, what? That don't look like the weekly. Okay, on the weekly here on the NASDAQ, everybody, this is similar to what I was talking about on the breakdown that I showed you on the 1 minute, on the 15-minute, and everything, where to me the sell side objective just wasn't met. Like I feel like, listen, there's a chance we could be done with downside with this low that was put in the market. I'm talking about this. This could be the bottom. We could rally and freaking go to the moon after that. I understand that. I know that. But I'm telling you my speculation. My speculation is that the sell side objective wasn't met. To me, I just feel like they engineered more liquidity. What is engineering liquidity? Is basically when they bait people to place stop losses. So everybody now sees this as like a support level. Like, oh, there's heavy support at, you know, 17,607. Feel me? So I think they're how do you think support and resistance levels are created in the first place? It comes from time periods where they make an equal low or they make an equal high, multiple equal lows. And I mentioned this to the masterclass people yesterday, but when people say like, oh, equal lows and equal highs, I hope you guys don't think that it has to be exactly equal. As long as it's relatively equal, we're okay to call it liquidity. It doesn't have to be the exact same, you know, low or high. Like, for example, these lows are relatively equal lows right there, or, you know, whatever. I just hope y'all catch my drift. Like, these highs, meaning this high right here and the high to the left, those are relatively equal highs. They're not exact, but they're relative. So that's a form of liquidity. I mean, so moving on, when I look at the lows right now on the weekly, these relatively equal lows, I just think they're engineering, and it's just very suspect to me. And this down move just wasn't enough to clean up this wick for me. We would have to trade deeper into that wick for me to believe like, okay. And to be honest, if we came down this far into the wick, I would assume we're gonna run these lows. And so that's why I just like, I'm very suspect on upside. When I look at the upside delivery as well, and I just strictly stared it from a bullish perspective. If I was bullish the whole time, I'm bullish the whole time. I'm gonna look at this like, yo, why the heck did we not bounce right here? I would be like, that's weird. And then I would say, why did we come down here without sweeping these lows first? Like, why didn't we sweep, then go higher? Why would we make somewhat of a higher low? Because it is technically, if you look closely, we made a higher low on the weekly. Why would we make a higher low so deep in here? That's strange. And then the third thing that would be super ultra ridiculously suspect to me would be like, all right, you know what? Cool. That's fine. Maybe I'm wrong. Well, now that I know we bullish, what we should do is definitely do this. You know, I'm cool. I'm on the right side of the market. We're definitely bullish. This bullish fair value gap is a nice one that could take us to the upside. Side note, we really wouldn't even want to revisit this if we truly had a bullish objective, but whatever. It's cool. We revisit it. Oh, it's lit. We about to use it. Hold on. Wait, what? What the heck? How we close under it? It's like, so if I was bullish right now, I'd be like, yo, why did this bullish fair value get invalidated after, like, nah, the whole bullish move is super sus to me. So if I was just strictly bullish, I'd be, yo, this is weird. But ultimately, prices continuing to move to the upside so far. And so we just have to adjust. But to me, we're in between sentiment. Like, we're smack in the middle of this price leg, just consolidating in the middle. Anything can happen from here. I've been on record for a few weeks now saying that I can see us making a lower high on NASDAQ while the S&P makes a higher high. The S&P already made a higher high because the S&P actually ran all-time highs so far. So far I'm correct in that alone. But now it's a matter of, are we actually going to get downside on the NASDAQ? The area where I can see the NASDAQ rejecting, if it pushes up higher, is this daily SIBI, meaning this daily bearish fair value gap. I would only be looking at a fair value gap out of context like this. Or I would say not out of context. I would only look at a fair value gap like this so far away from price action if we didn't meet the sell side objective yet. Because typically, if we met this objective, meaning we made a lower low or we swept basically and we pushed up, please don't look at this to reject price. I that's all I can tell you. So when you try to draw every fair value up in your chart, you're gonna run into a lot of trouble. You're gonna take a lot of losing trades. It's about context. The only reason I would ever look at that is because I don't think we met the sell side objective. So I still am interested in a bearish PD raise. This is in a premium. I'm interested in it. Like, am I saying, yo, when price goes here, full port to the downside? No, not at all. I'm saying that is an area that will tell me a lot. So if we could come here, that's an area that will tell me a lot. I don't know what will happen. I can see us dropping from there, but we'll see when price gets there. But I do like the fact that we staggering into it. Now, that's one scenario. That's if we trade up that high. The other scenario is, I already told you that, we came to this daily PD array. Here you can see we rejected right around the 50% of that PD array. And then on the 4 hour, the push out of our bullish PD array. So the bullish PD array from Friday that I told y'all we looking at is price bouncing off of here. It was a very nice bounce that happened, but it's stubborn. But then again, it's stubborn on both sides because the drop is very wicky. The drop is slow. It's consolidation. The pop out of here is also slow and wicky. And so this area right here, right now, I would tell y'all like this area right here, low probability conditions, and there's nothing wrong with waiting for confirmation. You can look to see if we found our way over these highs, because if we find our way over these highs, it's very likely we're gonna make our way into, we're gonna end up making our way into that premium SIBI that I was telling you about up here on the daily. So over these highs, very likely we'll make our way there. So you got an upside objective, then we'll assess again. And to the downside, I feel like if we lose the low from Friday, then you may see a move under this consolidation. And if we see a move under this consolidation on the 4 hour, then you could say, all right, it's very likely we're gonna come into this fair value gap. And then you have to ask yourself, do I want to go bullish from here? Personally, no. This is a fair value gap I would expect price to trade through. And that will be the start of our move to the downside. So I don't think price will use this to go higher. I just don't. I don't. It's, to me, like, nah. I'll be surprised. But then again, in a time period where the market is consolidating or where we don't have a true direction, everything is lower probability, because if the market is not actually trying to go nowhere, then that's just what we're dealing with. It's like, it's chopped. I know we've all been familiar with chop on the 1 minute, the 5 minute, the 15 minute, but guess what? We could chop on the daily too. We're literally in between a big high and a low. We've been traded in between here for a little while with no real direction. So you have to be open to this being a chop time period where we chop right in the middle of this price leg. Be open to it. But if we are trending, then this is the type of fair value gap I would actually ignore in price action, personally. So basically for me, my trading plan this week on the NASDAQ is, I would not really be trying to trade inside of here. We need to kind of pick a direction. Above here, I would target the daily SIBI from July 17th. Below Friday's lows, I would definitely start getting interested in price coming to the consolidation lows, you know, and under for real, and under. So that's NASDAQ. ES is gonna be where it's at. ES, you know, like I said, ES already ran all-time highs. Cool. But they're not really showing energy like they want to keep going. And then where ES is at, I wouldn't be looking at this fair value gap to take price to the upside. I wouldn't be looking at it. I know we're getting a little reaction on it, but I personally, when I look at ES, I would be surprised to see that happen. That doesn't mean it won't happen. I just would be a little surprised because probabilities wise, like in trend, for example, this fair value gap is low probability, you know, especially after we met an objective, like running all-time highs. You understand? So I'm suspect on upside on ES, but either way, I still think there's room to wait for confirmation. You could wait for fair value gaps to start forming, like, because fair value gaps show energy, they show intention, they show trend. Fair value gaps show direction. But if you're not seeing fair value gaps, we don't really have much of a direction. So that's why I say there's nothing wrong with being patient at all. Patience pays in this market and less is more. The Dow, largely the same sentiment. Like you see, it's getting stubborn up top. We ran all-time highs, yes, that's nice. Stubbornly though, stubbornly. So I'm watching that closely. And same thing with the Russell. No true direction on the Russell. I could just zoom out and show you no true direction on the Russell, and I just think I would stay away from that ticker. I'll stay away from that ticker. Well, CL. All right, so CL. Last week we were looking for price to come into this SIBI and then see what happens. This SIBI will tell us a lot, and specifically we were looking at price holding the lower half of that SIBI. So seeing that price is starting to trade to the higher parts of this SIBI is giving me vibes that we may want to come to the halfway point of this weekly wick. I would have a low hanging fruit objective on the upside of coming to the halfway point on this weekly wick. So I would probably, you know, draw a rectangle on that wick, make sure the middle line is highlighted, and target the halfway point on that. I just feel like that's an upside objective right now on oil. But look how oil is moving though. The only thing that would keep me a little humble and make me not actually take this ticker is what the upside is looking like. So you can see largely across the market, the whole market is kind of in a period of just what's coming next. What's coming next? We had this crazy 50 basis point rate cut from the Fed, and it's like what's coming next. The whole market is like if this was a movie, you would hear like suspenseful, like scary music in the background. That's what's going on. Like something about to happen, and we're kind of waiting for that a little bit. So, you know, I don't like CLs moving to the upside, but if we were in trend, I would definitely start looking, you know, higher right now. And gold. So gold is actually making the move higher right now so far. So let's get into gold. Let's talk about like the analysis that I had last week compared to like this week and why I may make a change on it. And obviously I'm teaching through the analysis. It's not just about direction, it's kind of the whys. I want to get y'all to understand the whys behind everything. So if you remember gold, for many days and weeks, we were talking about price using this bullish OB to go higher. And as it consolidated, we call that time distortion. Basically, the price is being held in a manipulated range before actually breaking out. Because this is a valid PD array, the order block was valid. It just consolidated there before actually breaking out. Cool, we break out. Now, what we do, we say, hey, wait for price to like on this breakout. Price is consolidating here. I'm like, yeah, it's very likely based on the movement that we're gonna return to this 4 hour, to a 4 hour BISI. My fault, it was right here. This is the 4 hour BISI I wanted price to return to on gold. And I said, this BISI will tell us a lot. And I said, I want us to react to the upper half of that 4 hour BISI, not the lower half, the upper half. That's the important area. If we made it to the lower half, I would 100% be targeting these lows. If gold came to the lower half of this 4 hour BISI, I would be targeting these lows. So the whole play is based on this green area. But guess what? we just missed it. We didn't get there. Cause like, dang, why is gold bouncing? Like it's a very interesting place where it bounced at. We didn't even tap into anything. Scan your time frames and realize, oh shoot, it's a whole daily fair value gap right there. That's what gold is currently bouncing off of, which also tells you a little bit about gold, because it's like, all right, gold made this healthy price action, and then it bounced up out of there. And so as it pushes, you can't do nothing but ride that trend. And so this is solid. You see price tapped into the 4-hour bullish fair value gap right there with this red candle. It tapped into a fair value gap right there, pushed to the upside. And the next place I have gold going in the short term would be 2662.4. That's why I think it'll go. And mind you, this is all-time highs. So here we are, we're trading gold at all-time highs. It's never been this high ever before. This is not a liquidity target. That's just the next place I have gold going. The first target already got hit on the upside. Now it's just like, are we getting to the second target? You see the movement is starting to slow down a little bit, so we'll see what happens. But I do think we should come here, and then from here I would need to reassess again and say, hey, where do I think price is going next? But right here, this is the next place I think gold should go. So I'll be looking at price holding like bullish P-Day raise into that target. So first place I would want to see gold hold, honestly, is literally this fair value gap it's currently in right now. That's the first thing I would want to see gold hold, to see if we want to move to yellow. That doesn't mean if we lose it, I'm bearish. Like, no, I'm just saying this is the first place I'm looking at, first place I'm interested in, to see if it can push us to yellow. Understand? So we'll see what gold has for us. But then again, this ticker is at all-time highs. You can see that lately the movement is slowing up, and so you don't have to trade that ticker if you're wary about continued direction. So SPY, this was the plan last week on SPY. We wanted to see SPY tap into this 4-hour BSC and VI and then run all-time highs. It did that. It actually came back to it again and used it again. And then now here we are at this point of contention. So SPY is actually in between PD arrays. So what is the PD array? First of all, this is a bullish order block. These two red candles. We're really interested in this part right here. We're really interested in this part right here. So that's a bullish PD array. We're also dealing with a bearish PD array, which would be this gap. So these two rectangles, one of them is bullish and one of them is bearish. And so when we're in between PD arrays, that's largely when you tend to see consolidation. That's why you see chop right there. Whenever we're at a point where the market could go in either direction, like that's a valid bearish PD array. If we got downside, that's gonna work. If we got upside, the bullish one is gonna work. So since we're smack in the middle of both of them, then that's when you're gonna see consolidation. So you don't have to trade inside of here. You can wait for a price to confirm. You know what I mean? But like that's kind of like SPY. I'm looking at both of those areas, but it's at a no trade area. Like I wouldn't take trades in here. I would want it to show some fair value gaps to one of these sides, like either start dropping off hard or start rallying hard. And then I'll find my upside targets, because once again, SPY is also at an all-time high, just like gold. And so I would have to do my method of finding all-time high targets, but I would keep y'all updated on the chat if we end up, pushing to the upside on SPY. And then you got QQQ, same vibe. I told you with QQQ, I've been looking to see if price would come into this gap. So far, QQQ swept the previous swing point on the daily. It swept it, and it's coming in. But this daily VI, I know it's a large area. I'm really looking at the upper half of it, like really where it bounced at is honestly perfect. I would be looking at the upper half of this to take us higher. If we lose the, like I said, if we lose Friday's lows, real talk is the same thing I said on Nasdaq. If we lose Friday's lows, then I may start to like say, hey, there's some potential downside here on the QQQ, etc. So we're really in a very tricky time period. It's a lot to be determined, but we making plans for both sides. If we break out higher, then I would expect this gap that'll be the next place I'm looking for price to come to, probably the halfway point of that gap, minimum. And yeah, those are all the tickers that I had today. I told you I can't be too long because as I said, I'm at a business engagement right now. But I hope you guys got a lot of value out of this. If you're watching this on YouTube, definitely click the link in the description for the free community. It's free, so definitely check that out. I don't know, somebody just came off mute, but just make sure y'all check y'all mic. So, and then also there's some links in the description as well if y'all want to get some links for some evaluation accounts for my futures traders. They're in the description as well. And subscribe to this channel, like the video, follow me on Instagram. There's a whole lot of trading videos I put on there to help you become a better trader. So it's a lot of value we putting out here in BTSMC. And with that being said, man, I'm gonna catch y'all next time. That's all she wrote.